A total of $189 billion has so far been injected into the economy by all arms of government in order to keep Australians in work and businesses in business. This has been described as unprecedented action. Today, I'm joined by economist Professor John Rolfe, who will discuss with me the Australian government stimulus package, which has been delivered in response to COVID-19. Thanks for joining me, John.
Yes, welcome. I'm very happy to be here.
Now, can you please tell me why these extraordinary measures have been taken by the Australian government?
Well, essentially, COVID-19 has stopped economic impact activity in some of our key sectors, such as tourism, airlines, and hospitality. And these are significant sectors in our economy. And then in response to try to control COVID-19, the government has essentially shut down other sectors of the economy. Now, that's particularly entertainment and arts, which is allied with the tourism sector, and a lot of the personal services areas, such as gyms and other close contact things that are another significant part of the economy. Now, the big problem is that then people don't spend as much money. So these reductions in activity then flow through to other sectors of the economy, particularly retail and other services areas. So what the government's doing is they injecting money both directly to people who have lost their jobs or unemployment, or through to businesses, or indirectly through the Reserve Bank rate cuts, with the idea of making sure that cash still flows in the economy and stopping it from contracting even further, which is what would happen if the current cuts flow through to other parts of the economy.
Okay, and what does this mean for the Australian economy as a whole? It's a lot of money being injected. Do you think it will have a long-term impact, or is this only for the short term?
Well, it's a big question. So roughly about a quarter of the Australian economy is currently under a lot of stress. So tourism, for instance, is an important primary sector in the economy, and with its direct and indirect impacts relates or accounts for about 8% of the Australian economy, with airlines, hospitality, entertainment and arts and personal services, we get up to around about 22-23% of the economy. So those are the sectors that are most under risk. And what the government's trying to do is to make sure that there's some activity keeps ticking over there. There'll still be impacts on retail and the services sector because they're such big sectors in the economy. But with a bit of careful stimulus, those sectors will basically have a holiday and then be able to come back once the control measures are over. The difficulty in making predictions, though, is it's hard to know how long the control measures will be in place. So if this was something that went for a month or 2 months, it'd be like a long Christmas holiday and it'd hurt, but people would come back and business would resume as normal. Mm-hmm. If it's a 6-month period where we've got a huge disruption, a lot of control over people movement and not so much business travel, then I think the impacts will be longer and deeper. And of course, if it goes longer than 6 months, if it's more like a 12-month problem, then it'll have a really big impact on the economy.
Okay. Talking, long term, I guess, does the Australian government have the money behind them to be able to continue this sort of injection of cash?
Well, the answer to that is no, but the alternative is worse. So
okay.
What they're doing is essentially borrowing the money, and it's much better for them to borrow the money and to try to maintain the economy than to let the economy collapse. Because if the economy collapses, it's also a terrible position for government because a smaller economy reduces the ability to collect taxes and to generate wealth. And it would also, of course, increase the demands on government to deal with people and businesses who are in trouble. So by maintaining the economy and pouring this stimulus money in to do that, it's like an insurance policy against a much worse outcome.
Okay. And, you know, hypothetically speaking, when things do go back to normal, um, how will we go about paying back any deficits?
Well, this is certainly going to be a huge hit. So the government's
Mm.
basically going to borrow the money or in effect, borrow the money internally to be able to pay for the stimulus. It will mean a little bit of a drag on economic activity and wealth into the future. I think in the next 10 years, it will hurt a bit. It will slow down what we would have been able to achieve otherwise, but
Yep.
probably after 8 to 10 years, it'll be a distant memory.
Okay. Well, that's good news.
Yes.
Yeah. So with the sectors that you were mentioning before, those who are struggling at the moment more than others, how is this money from the Australian government going to help during these tough times?
The money is designed to help in different ways. I think the most important stimulus is paying businesses to keep on workforce. So trying to maintain workforce. And that's actually really important because what tends to happen in a recession is something that goes for usually 2 quarters, so 6 months. People get laid off, and our experience from the 1992-93 recession was that the people who were laid off found it very difficult to get jobs again. So when the economy regrew, people didn't get back into the workforce. So what the government's trying to do here is trying to maintain people in the workforce so that it will recover quickly and there won't be the huge personal impacts that we often do see in a recession period.
Okay. Now, if we just move on for a moment and we talk about the impact of, say, tighter restrictions. For example, if the Australian government were to impose tighter restrictions across the entire country, how would these impact regional areas?
Well, I think they would hurt regional areas. So at the moment, the occurrence of the COVID-19 cases have been largely in metropolitan areas. They are particularly in areas where people are traveling a lot. So younger people who are traveling overseas a lot for work or pleasure. And the regions where people tend to be probably a little bit more insular have had much fewer cases. So the regional economies in some ways have been spared a little bit, apart from the big tourist areas like Cairns. But the regional economies tend to have more of its economic focus on primary and secondary industries, slightly smaller service areas. They don't have the big events that the big urban centres do, and generally we have a little bit less expenditure in the regions. So just for example, tourism's really important in many regional areas, but in Queensland, regions get 1/3 of the international tourists, but only 1/4 of the international tourists' expenditure. So it's Southeast Queensland gets 3/4 of that expenditure. So it's Southeast Queensland who will really be hurting from the current, complete absence of international tourism in Australia.
Okay. And in your opinion, can you compare what's happening right now to anything that you've personally seen before or something that's well documented, in Australian history?
Well, medically, of course, this is similar to the Spanish flu, but also was addressed by some types of restrictions about people movement, trying to limit the transmission vector, but of course without the big economic restrictions. So people kept working in the Spanish flu, influenza. Probably the most similar in my lifetime has been the global financial crisis of 2008. That was very different though. So in essence, that's what I call a top-down problem. So the financial system became unstable because of some poorer lending practices. There was a collapse of a bank in America, and then it spread from there. And a lot of bad debts in the system came to light, and that sort of impacted on global trade and financial institutions. This is very much a bottom-up problem. So what's happening is that there are restrictions on people movement, and that's stopping people from spending. And there are restrictions on businesses, mostly small businesses like coffee shops and gyms, and that, of course, is impacting on employment. So it's very much a bottom-up, both consumer demand and a business operational type of a problem. And because it's affecting so many sectors, it's becoming it's a huge economic problem at the Australian level.
Okay, and just completely left of field, you mentioned the supply and demand, with physical transactions. What about the boom of online purchasing? Is there something there? I guess, is there a positive in that money's still being injected, but it's now being done via online means?
Oh, I think there are some positives in the tea leaves here. So because we have so much technology in our society, because we have so many good systems, we have a very efficient healthcare sector, we've got a lot of things that are working for us and allowing a lot of economic functions to operate, even while we're trying to keep people apart. So this is a virus or a medical problem that we've coped much better with than we would have been able to 10 or 15 years ago.
Okay.
The interesting thing though is what happens now. So over time, economies always restructure. That's an automatic process going on. In the last 2 to 3 decades, we've become much richer in Australia, and we've seen people start to spend a lot more on travel, for instance, on personal services. You see a lot more growth of the coffee culture, of gyms and those sort of things that were unknown, 2 or 3 decades ago. We've also seen a lot more technology creep into our economy, into different sectors of the economy. So these are some of the changes that have been occurring. What a disruption like this can do is to really bring about very sharp changes in the economy, particularly if it goes on for a long time. So if we have a 6-month or a longer shutdown, some of the businesses that have closed probably won't reopen. And what will happen is that the businesses that do well in the future will be doing different things. So I would think, for instance, that there's potential for domestic tourism to become stronger in Australia because international tourism may be less attractive for a while. I expect that technology will become much more important in a lot of sectors. So we've seen technology come into things like airlines and mining and those sort of areas, but we haven't seen much technology come into, say, the health sector. In terms of, if you go to the health sector, you always see a doctor and a nurse. You deal with people all the time. Potentially, we will see a lot more technology bringing automation into the health sector in the same way we've seen it happen in banking. And it'll be the same in a lot of business sectors. So this sort of crisis will focus businesses on ways of using technology to allow interactions to occur without so much face-to-face contact. And I would expect that this might be a really big game changer in the way we do business.
So innovation is on its way. That's
certainly on its way. And what tends to happen is that when you get major disruptions in the world, like world wars or anything that really impacts, people come up with really smart ways of doing things better as they innovate out of it. And it's called the burning bridge syndrome. So what the burning bridge syndrome means that when you're desperate to achieve something or to make something work, you come up with really novel solutions, and you don't do it when times are good. So tough times bring out really novel and better ways of doing things. And I think at the moment, a lot of businesses are trying to service consumers or trying to do things at a distance and finding new ways of doing it. And those patterns will probably stay to some extent even when business becomes normal again.
Okay, so for example, those businesses who are now delving into the delivery sort of takeaway options that they probably never thought about using before. We've transitioned to online teaching to continue our services to students. Do you have any other examples that you've seen recently?
Well, I think education's an area where there's a huge scope for potential change. So we still have a model that if you're under 17, if you're a primary, secondary school, you have face-to-face teaching. And in universities, we have a bit of a mixed approach. So up until now, some of the sandstone universities in the capital cities have really focused still on face-to-face teaching, whereas a lot of the others have experimented or become much better at more electronic and other delivery mechanisms. And the question is, now that we are all moving to virtual delivery, will this change education, particularly higher education, forever? Will it also start to change secondary education a little bit? And we start to see much more flexible systems coming in. And of course, if you get virtual delivery and you have, you don't need so much face-to-face contact, suddenly it allows much more efficiencies in the way you deliver as well. So perhaps we could have one teacher servicing 60 secondary school students, and we could have one university lecturer servicing 200 undergraduate students. So it may shake out, the implications out of this may shake up our school sector and our higher education sector over the next 20 years.
Now, back to the stimulus package. Now, we've got the Australian government who's delivered phase 1 and phase 2.
Yeah.
What do you expect phase 3 to look like?
I think there's a couple of groups that are still probably not very well captured. So big business is going to be probably the next big focus of issues. So big business includes, say, airlines. So phase 1 and phase 2 help a little bit for the airlines, but in reality, we've got a couple of sectors of the economy where there's almost no activity at all. And essentially, businesses in Australia are very efficient, but they're also rely very strongly on cash flow coming through. So if that cash flow falls away, they're in trouble very quickly because the margins are really small. So when you've got small margins, if anything goes wrong, the businesses start to have troubles. And things have gone very wrong, so huge troubles. So I think that at the moment, Australia in some ways is lucky because most of the impacts have been on smaller businesses where it's not so expensive and in some ways easier to help. But there is also a group of bigger businesses, airlines, obviously. Perhaps some of the bigger hotel chains would be another example where they'll be under stress if this goes on for 6 months. And so I would think that be what the government's starting to turn their mind to now as to how we can come up with the smarter ways of helping them without necessarily taking them over or necessarily spending heaps of money and subsidising them.
Yeah, just when you mentioned airlines, it's astonishing how we can have so many airlines flying in and out of Australia, just at the end of last year, compared to how many are currently servicing Australia right now. What sort of, I guess, economic impact does this have on our, tourism sector, I guess, as a whole? You mentioned, regional tourism. What about Australia as a whole?
So the loss of tourism and the slowdown in airlines is basically symptomatic of the reduction in tourism and business travel.
Mm-hmm.
Is really, flowing through to the Australian economy. The challenge is going to be trying to predict what's going to happen in the future. So that one of the difficulties out of this is that it's not just Australia, it's not a single country issue.
Mm-hmm.
So trying to understand trying to predict what the global situation will be afterwards is quite tricky. I think the best guesses at the moment are that some countries will be able to control it and have a pretty robust economy coming out of it.
Mm-hmm.
But there may be ongoing problems, particularly in some of the developing countries. So I think that's going to make international travel difficult and challenging for a while until there's an effective vaccine. So I would think that the domestic tourism will recover much faster than international tourism.
Okay.
I also expect that people may not spend as much money on being a tourist anymore. So they may spend less money on travel, but people will still have money, so they will find other ways of enjoying themselves. So smart businesses will try to find niches of satisfying consumer demands for relaxation, and perhaps snaffle away some of that tourism dollar.
Okay, very interesting. Well, thank you for joining me today, John. You've shared some great insights, and I'm sure our listeners are enjoying this as well. Is there anything else you'd like to add before we wrap this one up?
Oh, I think these are challenging times, but the Australian economy is actually a very strong economy. So I think, as painful as this is at the moment, it's important to remember that roughly about 2/3 of the economy is still ticking over as normal, and that and while this is expensive and painful, it's still a relatively short-term problem. So in 5 to 10 years, I think we'll look back and we'll remember it, but it won't be a huge scar on the landscape.
Okay, which is, always good to hear.
Yes, definitely. It's important to get the perspective right.
Yeah, that's exactly right. Well, thank you very much for your time, John. And I look forward to speaking with you down the track. Stay safe.
Yes, thanks, Jess.